So would you set up Wolfie and then have that joint venture with another company? Have Wolfie joint venture?
No. Just set up a buffet over there, and there is no any joint venture.
I mean, if you wanted to do a joint venture, would it be more valuable to set up a Wolfie and have the Wolfie then do the joint venture with the Chinese company?
More valuable? You mean whether joint venture is more valuable than buffet?
Well, sometimes the joint venturing is more valuable.
Oh yeah.
And I'm just suggesting, as opposed to doing a joint venture with a U.S. company with a Chinese company, would it be more valuable to set up a Wolfie that you own 100% of and then have that company joint venture with the Chinese?
Yeah, that's a good point actually. It depends on your target. Basically, if you want to get 100% operation control and you want to get 100% threshold in the stake in the company, that buffet is much better. But if you want to get some local government's help, for example, if you want to like Google, eBay, Amazon, if they want to doing business in China, they have to find a Chinese partner. Without a Chinese partner, they definitely cannot do the business. And also if you want to get some government issued, orders, definitely the best way is to just go with a Chinese partner. That will much better to work by yourself independently. Yeah, that is a good approach.
I have a follow-up question. I've heard of, right now China is having more and more favorable policy for local incorporated companies. I've heard of Wolfie from the U.S. company. They established Wolfie in China, then they established a new company in China, and they thought that would be treated as local incorporated company with, can get the same treatment as a local company. Have you heard of that? Could this be valid reason to establish a new company? I've heard, they did tell me it's Wolfie set up a new company in China, they treat it as a Chinese company, so they can get other incentive from them as a Chinese company.
The bigger question maybe ought to be what's the regulatory environment like in China? What sort of incentives do they have? How might those incentives favor a locally owned company over a foreign company? What can a U.S. company sort of expect in terms of regulation and incentives and benefits? And I know, Justin, you've got some background in this a little bit, and having set up companies in China. Are you able to speak to that at all?
Well, I think broadly speaking, obviously, that Wolfie is going to have less beneficial treatment than a locally sourced company. I don't know if you have specific types of regulatory background. Like for instance, I can tell you on the tax side, you're definitely going to have increased tax regulation and increased scope of tax audit, and you've got more complex questions and issues that are going to be raised even at the local level, and then like you compare the IRS to the Chinese taxing authority, you've got multiple layers of review, and so you can pretty much assume that anything that gets done that gets reviewed at a Wolfie is going to get kicked up at least to an extra layer of review. So, there's more. I think there's more burden there for sure.
Does it help if you have a local partner on the ground in China?
Help with what?
Just help with navigating the regulatory environment, getting approvals.
Absolutely, yeah. I think so. Like I mentioned, the issue of real estate earlier. You have to have someone on the ground who can be there to do the due diligence. On the tax side, you absolutely have to have a relationship with your local tax inspector. Something that's kind of foreign to us from a U.S. perspective. We don't know our auditors, but you absolutely must on the Chinese side because so much of the rules are really enforced at the local level. They will often have guidance from up top, but the guidance may not be good, or even if it's good, it may not be any oversight that that's actually what's happening on the ground. So a lot of tax is almost negotiation on the ground with your local tax inspector. So those kinds of things, yeah. I think if you look at your very basic accounting, legal, maybe real estate. You need to have local partners that are on the ground and understand the very local market dynamics.
Speaking of accounting, and I'm going to get right back to you, but I don't want to lose this point. Adam, I've heard a lot about this idea of two sets of books, U.S. and China, because the accounting system is so different. Is that pretty common, and how manageable is that?
The reason because the U.S. GAAP and the Chinese GAAP are different, so if you report the book off in China, then probably our country to violate the U.S. GAAP. So that's the reason we sometimes keep the book. But I think there are some other also purpose of keeping book, which is
We won't talk about that. You got a follow-up?
No, actually, I understand the different treatment between local and the movie. So actually, my question is maybe for the attorney is it valid, like a new subsidiary created by two movies, would it be treated as a local company?
You mean a Movie set up another subsidiary under
Right,
Movie?
like two movie created new company, like
Okay.
50% owned by two U.S. movie.
Yeah. Actually, whatever it is a movie or whatever it is a joint venture, as long as it's established in China, they are deemed as a Chinese company. Yeah, but as for the when the two movies set up a company, definitely it's a domestic company because movies are domestic company. But with respect to some incentives, and as far as I know, most cities they have two different ways to encourage people to set up an enterprises in the specific city. One channel is they go to for example, they come to the United States and they welcome Chinese who graduated from the United States, University of the United States, and then they can, so this graduates will get very high level technology back to China and set up enterprise over there so that to encourage the science development. In that situation, they have some encouraging incentives for this kind of enterprises for Chinese set up companies in China. Another channel is they still encourage foreign investors to set up entities in China. Although the tax incentive you mentioned before was over since 2008, gradually over since 2008, the current federal income tax is 25% for domestic company and for foreign company. They are equally. But in most situations, you still can get some incentive from local government because local government will share a little bit tax return, share some tax from the federal income tax. For example, for some districts in Shanghai, they provide some rebate of their share of federal income tax to the movie or joint venture at around 16% to 20%, and they can get they can provide some around 35% of business tax to the company, and also they can provide around 6% value-added tax back to the company. But they are all from the local government. From the central government, there is no such kind of incentive policy, right? Yeah.
Anybody else? Some questions? Anna, is it another legal question?
What about money repatriation back to the U.S.? That's still a problem.
Okay.
If you make a profit and you want to take the money out.
Question is, how hard is it to get the money out? Now that you made all that money in China, can you actually bring it back to the U.S.? Used to be a problem. Used to have to have a big suitcase, as I recall. What's the rule now?
Yeah, actually, I think that's a good question because in most situations, when you put money in US dollars to China, it's harder to get your US dollars back. But there are a lot of ways to do that. The first thing is you can set up some contract arrangement between your foreign company with your local company. The contract can be like a management consulting contract, so that you can get consulting fee from the Chinese company to your foreign company. Also, you can set up some trademark usage agreement so that you can get trademark royalty. And also, you can set up IP licensing agreement so you get that licensing fee from the Chinese company. And also, you can say the Chinese company needs to purchase equipment in the United States, and the amount of money is how much is it, and then you can get the approval from the SAFE, and then you can transfer money out. And there are another way is benefits, dividends. Dividends is a reputable tax free in China, right? Yeah, and so that after the board resolution, after you get the bank verification, get the SAFE's approval, and you can transfer your dividends outside of China.